Greetings, members one and all of the Salivation Nation. Are gold and silver heading for a prolonged tailspin? Yes, this article comes to us from Barron's, and it is by Simon Constable, and it talks about how gold and silver are not looking good in the near future. Don't expect gold prices to recover anytime soon because the strength of the US dollar will keep a lid on any rally at the very least and could push prices to the metal down further. Traders wanting to profit from either a possibility should consider selling December-dated gold future contracts on the CME. Alternatively, investors may want to sell December-dated out-of-the-money call options on the SPDR Gold Shares Special Drawing Rights Exchange-Traded Fund, which holds bars of solid bullion. If the price of gold falls or stays still, and the seller of the option keeps the premium or sale price and the options expire worthless to the buyer. Now, of course, that's somewhat Greek to most of us here because, we may understand the language around what's going on, but we stack the physical, indeed. Betting against the resurgence in gold prices comes down to the relationships between the U.S. capital markets and those of other major countries. Already, gold prices have tumbled this year, falling from a peak of $1,368 a troy ounce on January 25th to $1,235 recently, according to Bloomberg. During that period, the trade-weighted dollar index, a barometer of the performance against major currencies such as the British pound, the euro, and the Japanese yen, has rallied. It recently hit 90.9, up 7% from 84.6 on January 25th, according to the St. Louis Federal Reserve. This inverse relationship between gold prices and the dollar index is normal. When the dollar index is robust, the price of gold tends to be weaker. Of course, there are periods when both move together. Some market professionals see that matter more concretely. Gold is a measure of the dollar, says David Ranson, Director of Research at the financial research firm HCWE & Co. If the dollar goes up, in a sense, the price of gold has to go down. The critical thing is betting against gold is that the inverse relationship will likely hold true, and the dollar will remain strong. The reasoning is simple. First, short-term interest rates look to continue rising, will likely do so faster than government bond yields in other major economies. As the Federal Reserve raises rates, the value of the dollar should rise as investors pour money into greenbacks. This is particularly so when the yields are rising in the U.S. and the yields are stagnant and lagging elsewhere. A recent report from Brown Brothers Harrison notes that interest rate differential of U.S. bonds relative to either German or Japanese debt has reached its highest level since the financial crisis. The differences between the 2-year U.S. Treasury and that of the 2-year German bond or the 2-year Japanese note were recently 2.76 and 3.25 percentage points respectively. The wider rate differences impact decisions and hedging costs, the report states. The wider short-term rate differentials also increase the cost of being short the U.S. dollar more generally. Anyone wanting to sell their dollar short to bet against it would have to borrow U.S. dollars at an interest rate far higher than the rate the money would fetch in other currencies. That difference in borrowing costs would likely act as a major deterrent to anyone wanting to bet against the greenback. The differential could even be wider as U.S. economies growth accelerates. If second quarter U.S. GDP growth exceeds 4%, as many analysts expect, that would cement the idea that not only will the Fed continue to raise the benchmark Fed funds rate, but also that it can be more aggressive than the other two central banks. German GDP growth is running at 2.3% slower than the 2.9% seen a few months ago, while Japanese economy is contracting. In other words, it doesn't seem likely that either the European Central Bank or the Bank of Japan will raise the cost of borrowing as fast as the Fed. That also means that the value of the U.S. dollar will not fall in a meaningful way anytime soon, and so gold prices will remain subdued. The dollar index could rise another 5%, says Bob Sinche, an analyst in Amherst Pie Port Securities. If gold and the dollar keep moving the same way, that could mean a drop of 6% in gold prices. And we're going to pause right here because, and given everything that we talked about in a case where they may track together, at the time of the recording of this video, after the latest economic news about the GDP, which we'll get to in a moment, is released, here are gold and silver prices up. Everything is up except for palladium, and it's not up by a whole lot, but I was expecting them to further go down. I mean, we're talking 1210s and low 15s for silver, but look at that, they're actually climbing a bit. And it could be that the prices beforehand, the announcement, were baked in, and more on that here as we continue, because I have a possible explanation for why we're seeing prices climb at the recording of this video, which is midday on Friday. The announcement was this morning. Traders choosing to sell call options in the SPDR, special drawing rights gold shares ETF, should make sure the strike price at which buyers can exercise the shares are above current prices, about $116 a share. And that article kind of finishes out talking about that. But the numbers are out. The GDP growth did exceed 4%, as many market analysts expect, and it's 4.1%. And so that's something that's sort of baked into the price. But I think that some were expecting it to be 4.2%. And it could be that because it didn't quite meet, even though they had expectations that would rise above 4%, which is great news, would suppress gold prices. In anticipation thereof, the fact that it didn't quite hit that mark may mean that the economy isn't quite as what they'd expected, although it's great news. And it's great news when CNN, on their homepage, mark this down in the history books, actually says, in their analysis here on the headline, economy is doing well and Trump deserves some credit. Just that headline alone is mind-blowing and shocking from CNN, sometimes referred to as a Clinton news network. And also, they say U.S. economy grows at fastest rate since 2014. Of course, that's kind of a throwback to Obama, but during the Obama administration, the GDP never got to 3%. I think at one time it got close, but it never quite got there. So it's obvious that we're in an economic recovery, and some may go as far as to say that we're in an economic boom. I don't know that I would go quite that far yet. We'll see where things go. Obviously, the tariffs are going to have an effect and on where things go and how. And there's apparently some progress on that front, but it's a unknown. There's a lot of unknowns there, and tariffs are essentially taxes. And even Trump himself has mentioned that he prefers total free trade. But his big argument is it's not fair. And so his way to battle that is to threaten and to impose these tariffs, which are taxes, essentially. That does have some effect on farmers and those in industry and the like. And we see here that Coke is going to be raising prices because of the aluminum tariffs. That should amount to just pennies per can, but even less. But without reading that headline and getting into the weeds on that, a lot of these are metal tariffs, and this is Salivate Metal, the metal channel. But nonetheless, it is quite interesting to see where things are playing out with the economy. In spite of all this, and now we're seeing these numbers go up. It's fascinating people make predictions, and I am one of them that do. And of course, it doesn't matter. Most people, that come to my channel understand that I do like to talk about these things, but it's not something that I hedge or I'm live and die by. It's even when I make a prediction, I could be wrong in my prediction, and I still feel as low as they go. They can go. Gold could go to $1,100 an ounce, as I had mentioned in a prior article earlier this year. Silver could go below 15. I still feel that by the end of the year, we're going to see gold go up to close to $1,400. and silver close to $20. It's just a hunch I have. I'm curious. I've mentioned it multiple times on live streams and on videos. And when you make a prediction like that, especially in these down markets, it becomes a little bit more it becomes a little bit more brazen or bold when the markets are continuing to kind of fall or lay flat. And so I'm curious to see where it is. If I'm wrong, it'll be fine. I don't hedge any. I don't live and die by my predictions or stake my I don't stake my reputation on my predictions because it's just for fun. I think it'll be interesting to see. And by the way, if they do rise up to that level, I won't take any credit for it either because it's just a hunch. There's no technical really reasoning behind it, although I've read some articles that talked about how those prices going up because of some technical reasons as well. I just happen to kind of agree with those now. It's not zany or crazy price predictions. It's just kind of where I think it is. I won't take any credit for it because again, there's no real hardcore technical analysis behind those predictions. Just something I feel in my gut. Post your thoughts below. It's quite interesting. I think it's fascinating. I certainly appreciate those of you who take the time to listen to these videos because I think it is fascinating to kind of see where things are. The psychology at play. There's a lot of psychology at play with this too. And people don't realize they get in the weeds with the technical aspects of it. I tend not to. I just kind of like to discuss and see where things are. I'd like to extend the multitude of gratitude, y'all, for watching and encourage you to please rate, comment, and subscribe.